Let's talk now with David Wessel, Brookings Institution Senior Fellow in Economic Studies. Let's talk about the economy, and we're going to see what is known as, I hate to say it, the dot plot. How much lower do you think the forecast on economic growth may be, and how much higher do you think the forecast on inflation may be?
Well, I think the problem they have is that they probably put in their dots before we got the latest data. So I think not low enough on growth and not high enough on inflation. The most interesting thing is that I looked in the December meeting, the most aggressive member of the FOMC was predicting interest rates at the end of this year at 1.1%. And that just tells you how much thinking has changed in the past few months.
Let's talk about the dual mandate. On the one hand, low unemployment. Unemployment looks like it's going very low, and growth of the economy and fighting inflation, stable prices. Where is Chair Powell now on that poll?
I think Chair Powell has basically said we're at full employment, or pretty damn close to it. We're not at price stability. But it was complicated enough before Ukraine, but the latest forecasts for first quarter GDP growth are less than 1% at an annual rate. So he has to worry about sounding forceful about inflation. He needs to reinforce the message that the Fed will do what it takes to bring inflation down towards its 2% target, which they're not going to make.
So that's his main front in this war right now.
But secondly, he has to be careful not to lock himself in, because we don't know what's going to happen with the economy. We don't know what's going to happen with Ukraine. And if there's a deterioration of the economy, he doesn't want to have backed himself into a corner. So this is a more unusual press conference than most. He has to send a clear message that he's there on the inflation battle, but not lock himself into raising interest rates 6 or 7 times this year, because when he looks into the Fed's crystal ball, as cloudy as it is, he can't see it.
How does the war in Ukraine change everything?
It reduces the outlook for growth in the U.S. Rising energy prices are like tapping the brakes. But it also,
it's a tax.
It is. It's a tax. But it also increases the inflation rate. And although standard central bank thinking is you don't need to tighten when you have a supply shock, the Fed now has to worry that these persistently bad inflation numbers will change inflation psychology, will build in inflation expectations. And that's really what they want to avoid. When Chair Powell talked about this new framework, he kept talking about it's important to keep inflation expectations, in the words of central bankers, anchored. And there is a risk that they're becoming unanchored now.
We've got a little time left. I want to pivot to China. The shutdowns, major case counts rising on COVID in Hong Kong, Shenzhen areas have been shut down. How does that affect the global economy and the U.S. economy?
Badly.
Yeah.
We know that we have supply chain constraints. We have demand pushing up against supply. That's why we have inflation. The shutdown of Shenzhen alone is going to mean more constraints on supply just at the time we have revival of demand in the U.S.
David Wessel, thank you very much for being with us. Always good to see you, sir.
You're welcome.
Fantastic.